You see, I need to share my screen first, yeah? Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia that is managed by our company, LifeChamp. Our webinar title today is Insights into the Shipping Industry. My name is Shane Chu. I'm the moderator for this session. I think not many of us here are familiar with the shipping industry. So today, our speaker here will share with you more insights into this shipping industry so that you know how do we evaluate companies in this industry. All right, disclaimer. Whatever we share in this webinar is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. So allow me to briefly introduce our speaker today. He's a full-time investor, author, and trainer. He has almost 30 years of investment experience in Bursa and 14 years of experience in foreign markets. He's the best-selling author, invests in foreign shares and also invests in REITs. He has also published 3 books, Global Economic Collapse, 2023 and 2004, which is Chinese Astrology and Global Trends with Evelyn Tan. He recently published the book Unlock Your Wealth Potential with Evelyn, which is available in major local bookstore and other platforms and garnering 15 5-star review on Shopee. His area of expertise includes geoeconomics, geopolitics, and broad sectors in the resource industry and REITs. He has 8 years of experience teaching retail investors in local stocks as well as global stocks. So academy-wise, he graduated from National University of Singapore in 1989. So he's none other than Mr. PC Wong. PC, how are you today?
Fine, Shane. Thank you. And thank you all who are logging in for today's session.
All right, so I will stop sharing my screen and you may go ahead by sharing your screen.
Okay. So today we are going to talk about the shipping industry, and some of the topics that we will discuss is understanding the 5 key indices in shipping, how economy, commodities, and geopolitics affect the shipping indices, correlation of commodities with prevalent indices, and how do the indices correlate with the Bursa shipping company's performance. So let's talk about the 5 shipping indices. Now, the most popular one, of course, is the World Container Index. This index tracks the cost of shipping containers on major trade routes. So there are actually 2. There is one that is the Drury, which is updated weekly, and their data is very short. Okay, unless you are you paid for the subscription, then you can actually have a more interactive chart. And other than that, it normally gives you a 1-year chart of how what is the cost per container that is being shipped worldwide. But you will not be able to have a better longer term picture because it's only 1 year. So most frequently used perhaps will be the chart by tradingeconomics.com. So here they have a chart with historical data up to 10 years, okay? And you can actually then see how the shipping, the container shipping has performed. And, for example, during this period here, okay, you see a very huge bell here. Okay, during the run-up was because of the pandemic in 2020. And subsequently, when the restriction on the pandemic was lifted, there was a lot of pent-up spending. And that caused the unusually high demand for goods, which actually pushed the the container shipping index much higher. And at one point, it reached a record high. But subsequently, when the pent-up demand subsided, and then it started to fall. Now, interestingly, it was somewhere around this time during towards the end of 2021 when inflation was also very high because of the huge demand for goods. And once the central banks all started to increase interest rate, you can naturally see that demand for goods will actually recede. That is because interest rates affect consumption. Uh, People have less money to spend, okay, because the cost of financing have increased, especially for a lot of business owners. But very interesting here, after it was at the bottom for quite a number of years, what happened during this period was the Middle East conflict, where the Yemeni government threatened all shippings other than those belonging to China and Russia that transit in the Red Sea will be subject to attack. And that caused the container freight index to spike up, but it is still not enough to reach that from the previous high. It's just a minor peak, and then it start to taper off because a lot of the shipping originally was affected, but then of course they took a longer route, okay, via Africa to Europe, but also because that's a generally slowdown in the global economy. Okay, for example, the European economy is have several countries that are besetted by recession right now. Okay, and there's a huge decline of industrialization in Europe. Okay, we call it deindustrialization in Europe, which means there's lesser demand for raw materials, there's lesser demand for intermediate goods that need to be shipped to Europe via the Red Sea and the Suez Canal. So that is why even though the shipping rates have gone up, but due to lesser demand, eventually it start to taper off. So the other one is the Baltic Dry Bulk Index. I think this is very popular as well because a lot of economists often like to relate the Baltic Dry Bulk Index as dictating the health of the general global economy. And it mainly is important because it is an index of average prices paid for the transport of dry bulk materials across major routes. So often viewed as a leading indicator of economic activity because changes in the index reflect supply and demand for important materials used in manufacturing. And this is according to Investopedia. So examples of major dry bulk commodities include iron ore, coal, and grain, which account for nearly 2/3 of global dry bulk trade. Minor bulks include steel products, sugar, cement, cover the remaining 1/3 of global dry bulk trade. So very importantly is iron ore, coal, and grain because they exert the highest influence on the index. So this is how the Baltic Dry Bulk Index has behaved, okay, throughout history. Now, there was a major spike here, and this was during the global financial crisis. What happened during this period was because of the global financial crisis, what China did was spending a lot of money to push up the economy because the global economy was actually in a very deep recession. So only way that China wants to get out of that situation was to spend a lot. Okay, if I remember correctly, they issue close to several trillion renminbi, um, uh, almost 1 trillion US dollars. Okay, to spur the consumption, the development of China. And so in a way, sometimes people often say that China actually bailed out the global economy because they uh, spend a lot of money building up China's infrastructure, uh, building up its own industry. And that was when the price of commodity actually reached a peak uh, uh, compared to previous decades. So because of this, um, notably because it is raw materials, and especially when China spends a lot in infrastructure, you definitely need steel. And steel, the very basic requirement would be iron ore. And on top of that, coal, okay, which is called the coking coal, okay, is used to merge with iron ore to come up with steel. And because China then did not very aggressively pursue the green energy like it has been doing over the past almost, I think, uh, 10 years or so. Okay, before that, China doesn't have any green energy revolution. So what happened was that in building up the industry, in building up the commerce, one of the major source of energy was coal. And that was when the demand, okay, for dry bulk shipping actually shot up very high. So after that, things start to taper down, okay, because there's no huge impetus, okay, for demand anymore because what have been bought has been spent, and there's no way that any country can continue building up, like spending every $1 trillion, even for China, spending trillions of dollars over, doing the same thing, all over again. So what happened was that the Baltic index actually start to taper off. Now, the time that when this spike came was, of course, during um, the Russian-Ukraine war that caused a sudden surge of demand for raw materials. So the other index is the Baltic Dirty Tanker Index, and I'm sure a lot of people have not quite heard about it. It is an index of average prices paid for the transport of crude oil across major routes. Sometimes it is referred to as the BDTI. So if you are interested in the shipping of energy, then this index becomes very important. Okay. So for example, during this period, um, there were certain peaks. Okay, and later I will show you that it is often related to the price of crude oil. Okay. Then there's also the Baltic Clean Tanker Index, or BAIT. It is an index of average prices paid for the transport of carrying clean petroleum products such as gasoline, kerosene, and diesel across major routes. Sometimes it is referred as the BCTI. So again, it is an energy shipping index, but this time for refined products, refined oil products. And there's also another index for LNG shipping, but unfortunately, there is no direct index that shows the cost of shipping of LNG across the globe. And if, when there is one available, it is actually behind a paywall, okay, which means you need to subscribe in order to view what are the rates. So as an alternative, there's this UP World LNG Shipping Index, which is a stock index designed to show and measure the performance of world publicly traded companies involved in the maritime transport of LNG. Now, this index is updated weekly. LNG freight index chart is available, but it's behind a paywall. So sometimes if you want to know how are the LNG shipping companies performing, then you can actually use this chart as a correlation against some of Malaysian companies that are involved in the energy shipping, especially LNG. Now, of course, the biggest player in Malaysia in LNG shipping is the MISC, okay? And MISC is not only LNG shipper, okay, it is also a major energy shipping company. In fact, it is rated among the top 10 in the world. So let's look at how the economy, commodities, and geopolitics affect the shipping indices. Now, we need to understand recent events. For example, there's resurgent inflation as the price of commodities rises, and weaker US dollar and China's stockpiling are the main reasons. US dollar has weakened from its peak many months ago, and because of that, the price of commodities are now moving up again. And as the price of commodities move up, generally what a lot of countries would do, then they would become, especially if they lack the natural resources, then they would actually react by stockpiling, okay, especially certain commodities that they do not actually produce locally. So what some of these countries do, then they would actually want to stockpile for fear that there could be a shortage somewhere down the line. And because of that, there's a sudden surge in demand that overall will bring the price of commodities much higher. That is why a combination of a weaker US dollar, because commodities are generally traded in US dollar. When the US dollar weakens, that means the price of commodity measured in US dollar would be more expensive. So a combination of these two would actually result in inflation. And when the price of commodities actually rise, so too will be the shipping companies that are involved in the in shipping the commodities, because when countries are stockpiling, there obviously would be more demand to bring shipment of the raw materials to the designated country. And that is when then, because there is a time frame uh, for companies in the shipping industry to build new vessels, okay? So sometimes it takes about 2 years, okay, or so. So what happened is that even when demand is high, there will not be enough time for them to immediately bring the ship uh, into shipping that commodities. And by the time the newly built enter into the industry, that's when the price would actually start to fall off. Very similarly, like what we see here, because when the Baltic Index reached a record high during this period, there were a lot of new builds, okay? Which means a lot of companies, they were expecting that the commodity price would remain lofty, And because there's a huge demand, they started to build new ships. So often when a fleet of new builds enter, then there'll be a drop off, okay? Because then the demand suddenly starts to fall off, but right at the same time, there are a lot of new ships that enter into the sector. And that is when, companies will have to slash the price, okay, in order to make sure that the new ships are able to ship at a cheaper cost. Otherwise, then that investment into that ship will face a longer ROI. So it is the same with the container shipping, because when there was a huge demand post-COVID, there were a lot of new builds of container ships. So often when this happens is that when they enter into service, that's when there's oversupply. And because the global economy behave in cycles, sometimes the new builds enter just when there is a downturn. So what happens is that a lot of all these ships will then be scrapped, especially the older ships will be scrapped because they cannot continue to maintain a large fleet if, let's say, business have shrunk. And of course, another factor, okay, that drive the price of commodity higher is the sanctions against Russia oil, gas, and minerals, especially Russia oil and gas. So what happened is that when they sanctioned Russian oil, okay, there were a lot of shipping companies that go through a different channel, okay, in order to buy Russian oil and then to ship it elsewhere, okay? And gas, for example, previously there is direct gas from Russia to Europe. But because they banned Russia gas, the Europeans have to buy American gas. But American gas cannot be shipped to Europe in gas form. So what happened is that there's a very long process from gasification, okay, to shipping and regasification. And that is why LNG is more expensive, okay? And shipping for LNG is more expensive, okay? And that is why during certain period, especially in 2022, when Europe has an energy crisis, the LNG shipping was actually very, very expensive, up to about $1 million per day. Okay, and if you look at MISC's uh, performance during that period, they actually did quite well. Yeah. And then, of course, the crisis in the Middle East and Red Sea shipping restrictions imposed by Yemen. Okay, now these are how geopolitics can actually influence the shipping industry, because Yemen suddenly say that any ship other than those belonging to Russia and China that transit along the Red Sea will be attacked. Okay, this is in response to the crisis in Palestine. So let's look at the containerized freight index. So as I mentioned just now, during this period, there was pent-up demand, okay, post-COVID, and how the start of Yemen's attack of ships transiting on the Red Sea have caused the rates to spike up, okay? So this is because ships have to take the longer route around Africa to reach Europe. And a news surfaced just about 2 days ago when Yemen said that they are prepared to even attack ships, okay, that are in the Mediterranean, especially when they are shipping to Israel. So if let's say that happens, then the Mediterranean Sea would be another conflict area. And this could, if let's say it gets out of hand, then that would actually affect the containerized shipping. So for Example, what we will likely see would be containerized shipping costs will remain high as long as the Middle East crisis persists. And if no party wants to reach a peaceful agreement, then I think this would continue to impact. Now, sometimes um, we may not immediately feel the impact, okay? But if let's say uh, it happens in Mediterranean Sea and it happens in the Red Sea, eventually this will actually reverberate to our region in the way that inflation actually ripple across the global economy. Because even for Malaysia, we also have input costs, okay, from other countries. And if let's say the containerized shipping actually starts to spike up again, then we will also feel the effect of the inflation. Because if let's say container ships take a longer route, okay, around Africa to go to Europe, that means container ships would actually take a longer time, okay, to transfer from one point to another, okay, and that means that they might not be able to be, they might not be available during specific time, and that is when that asset is committed to a longer distance and longer time frame, and that will actually reflect in the overall containerized shipping across the globe. And in that sense, we will also feel its inflation. However, the cost is likely to be capped by slowing consumer demand for goods in Europe. As I mentioned, Europe is a continent that is suffering from poor retail sales and the industrialization. Um, Mainly because Europe also has a lot of problems, okay, especially pertaining to a lot of protests right now in Europe when the citizens of the various countries, when they protest, they become unproductive, okay? Especially right now, they have the farmers protest. And when farmers protest, that means that they are not going to be productive in the farm, okay? And this could actually cause inflation. And because of the deindustrialization of Europe, because of the high energy costs, a lot of industries have already shifted elsewhere. So this result in a lot of people losing their jobs, and that is reflected in the poor retail sales. In fact, if you look at Europe's retail sales, if we build in the inflation, which means the net retail sales, most of them are actually in negative territory. So that is why even though there might be occasion when it might spike up, but it will be capped because a lot of the goods that transit to Europe via Africa, the demand will be impacted because of slowing retail sales, which means shipment of goods will be much lower. And also more ships have been commissioned since the post-COVID demand. Okay, a lot of the ships that were built from 2021 to 2022 and 23, right now they are new ships and they need business. Okay, so that could be some slashing in price to make sure that the newly built ships can meet their ROI. So meanwhile, goods from Europe can be shipped to Asia via the Belt and Road Corridor. So train freight across Eurasian continent has been rising steadily over the past few years. So while shipping from certain countries to Europe may be impacted, but then there's more shipment of goods via the Belt and Road Corridor in Eurasia. So especially from China to Europe and Europe to China, there has been multitude increase in terms of number of shipments. So overall, the containerized freight index, although there are potential for it to spike higher, but looking at what is happening right now, especially shipment on ground via the Belt and Road Corridor, that could actually help cap the price of containerized shipping. And I think more importantly for people who are looking at Malaysian shipping companies, the Baltic Dry Bulk Index is very important because Malaysia also have a company that is in the dry bulk business. Okay, I think the bigger one is actually Maybulk. So when the price of iron ore surges, the Baltic index will correspondingly surge, but there is often a lag. So here, if we look at the chart, okay, this is the iron ore, and this is the Baltic dry bulk index. So what happened is that when iron ore surge, then you can see that it did not immediately see a corresponding surge to a peak in terms of the index. And over here as well, when iron ore started to go up, the Baltic index did not reach a peak, okay, until much later. And subsequently, by that time, the price of iron ore has dropped. And then you see that it dropped soon after. So there's often a certain lag, okay? And this is because freights are contracted forward, okay? For example, when people see that the price of the commodity has started to go up, then what they do is that they want to contract forward to have ensure that there's steady supply, okay, to a specific destination. So what happened is that there were a lot of bidding, and therefore it resulted in a much higher index later on. But by that time, the price of iron ore may have receded, okay? So when demand is strong, the more ships will be put to the sea, and increased frequency of shipping will eventually put a price cap on the shipping cost. And on top of that, as I mentioned, there will be a lot of companies that suddenly see, like they see the golden egg, then let's find more goods. Let's find more geese, okay, so that they continue to lay the golden egg. So what happened is a lot of companies in the shipping industry suddenly overcommit, and that is when they overcommit, they do not see the kind of business volume, then they have to sell off some of their assets. So when you sell off your assets, often will be at a loss, okay, because that asset, once is being used, okay, will not have an appreciating value, okay? Its value will start to depreciate. So the only way you can get back the money is by putting it into good use. But when you have an overextended fleet, just as the price of shipping start to fall, then you have no other options but to sell off your asset. So that is why the downturn can often be quite violent, okay? And this is the same story like what happened during the COVID pandemic, okay? Because there's a surge in the demand for gloves. Then we see a lot of companies suddenly wanted to build their own glove manufacturing facility. Even companies that are not in that area, okay, some of them are in the property area, but then they suddenly see that the price of glove kept on going higher, and some of the glove company are making a lot of money. They themselves also want to start manufacturing gloves. But what happened to the glove industry after that? Okay, and a lot of companies that made a lot of money then, suddenly their share price right now is not reflective, okay, of, it never go back to the pandemic high. So that is why when there are certain demand, suddenly everyone wants to do it. And when everyone wants to do it without a longer time frame of thoughts on how economic cycles behave, okay, then companies will often find that they have overextended themselves. And this is the same, whether it's in shipping, whether it's in the glove, or even in plantation, okay? Like last time, there were a lot of demand for oil palm was very, very high. and companies say, let's have more plantations, okay? But the more plantations that they have and other countries see the benefit of it, suddenly oil palm is no longer, we see in the region, okay? You have it in Africa, you even have it in South America. So that is why when during certain cyclical, whether it's La Nina or El Nino, the impact on the price is not what it used to be in the past because of massive expansion of plantation. And that is when it will come down to how companies efficiently run their business in order to generate better profit. And if we look at the Baltic Index, okay, other factors do come into play. For example, wheat and coal remain strong going into 2022. So the demand for dry bulk shipping remained lofty for a while longer, even though the price of iron ore started falling in the second half of 2021. So here is the second half of 2021. It started falling, but then the Baltic Index continued to be quite high, and that could be other factors as well. Okay, like wheat, okay, it remained very high going into 2022, as well as coal. So sometimes it's not one specific product, okay, not a specific commodity, but you have to overlay with other commodities, especially when we understand that 2/3 of it comes from coal, iron ore, and grains. Okay, uh, the bulk of the shipping, okay, you can check out whether it's rice or wheat, okay, and these two commodity are the most widely consumed. So that could actually give you an idea, okay, of where that particular index will be heading. If you can overlay, okay, iron ore, wheat or rice with coal, then if let's say you are investing in the dry bulk, okay, if all three behave similarly, then you know roughly it is coming to an end. But if let's say certain of these commodities have still expansion, okay, in their price, then you could have another few months time. Okay, so that is how sometimes if you want to correlate, this one way that you can correlate. So let's look at the Baltic Dirty Tanker Index. When the price of crude surges, the Baltic Tanker Index will correspondingly surge, but there are often again a lag factor. This is because freights are contracted forward again. Now the outlier was in 2020 when the price of crude oil plunged, but the demand for shipping rose. You remember during this period, people who bought the oil futures, yeah, the price actually fell into negative territory. And because everyone doesn't want to pay, okay, to hold the oil. So that's why the futures actually collapsed. But of course, there are many countries that took the opportunity to buy at the low prices and ship the crude oil to their respective countries. So that is why even though the price of crude oil, okay, collapsed over here, there was a peak in the shipping index. Now, the other thing is that when we look at the Russia-Ukraine war, followed by sanctions against Russia, you can see that during this period, the EU actually has an energy crisis, okay? But then there was a certain peak, but subsequently it tapered off, okay? So what happened then? Of course, there were sanctions to cap the price of Russian oil and start off draining from the US strategic petroleum reserve. So when the US start draining its own strategic petroleum reserve, it actually provides a floor, it provides a cap to the price of crude oil because it keeps on draining from its reserve to sell into the market so that the price of crude oil didn't continue to go up. And one of the main reason is that we all know that the entire global economy consumes energy, and oil is the one of the major contributor, okay, as a source of energy. So what happened was that sanctions and to cap the price and draining of SPR eventually brought the price of oil down, and subsequently then you see that it has also tumbled, okay? So what to expect? Now, major oil price movement is expected in the coming months, and this could affect the BDTI. So what kind of oil price movement can we expect now? First thing is that the US has now started to refill. And because of the, for example, here, the US SPR stock refilling has stalled for a while because oil price have gone up. So what they do, they started to, uh, they do not want to start refueling because that would create a competition for the demand of oil. Okay, and that would push the price of oil higher. Okay, but if we look at it, the SPR stock has fallen by 37.6%. And the other thing is that OPEC and Russia have extended their production cuts. EU could once again face an energy crisis as winter approaches. Okay, and Fed cutting interest rate could weaken the US dollar and drive the price of crude oil higher. So even though right now the Federal Reserve has said that we keep interest rate on hold for longer, but there is another factor that would push the Fed to cut interest rate. If you follow the what is happening in the US, then you will realize that the US debt has gone up tremendously. And based on the current US debt, which is now reached about 1.1 trillion in interest payment a year. And if this debt continue to go up by end of this year, the interest payment could be somewhere around 1.6 trillion to 1.8 trillion. And the US have no money to pay for it. So what will happen? They will borrow again to pay for the interest. And that is when the debt has got out of hand. So the only way that the US can reduce the payment on its debt will be when the Fed cut interest rate. So the Fed may be pushed by the high yields of the bond to begin cutting interest rates so that the burden on the government to service that debt is greatly reduced. So in other words, the Fed is caught between a hard rock, okay, and a hard place. So that is why the US debt has become unsustainable. And if they keep on borrowing to pay for the interest, then the US economy would actually stall. Especially right now, Biden already proposing for those people earning more than $1 million will face tax as high as 44%. And not only that, they are looking at taxing unrealized gains by about 25%. Okay. So that means even if you have gains, but you have not sold, it's unrealized, the government will tax you first. And then if next year you didn't make any gains, but you lost from your investment, then that's too bad. So that actually, all these taxes will actually affect the US economy. Okay. And on top of that, it will actually worsen the global economy. And the crisis in the Middle East remains a powder keg and could affect many oil-producing countries. Iran has threatened to block the Strait of Hormuz if war breaks out. So recently, there were a lot of panic when Israel and Iran actually exchanged fire. And Iran has said many times, if the country is ever attacked, it will actually block the Strait of Hormuz. So the Strait of Hormuz is where more than 20%, somewhere close to about 25%, if I'm not wrong, of oil going from the Middle East to the rest of the world. So if that is blocked, then the price of oil can actually go up very, very high. Okay. So breakout of war in other tense regions could also drive the price of oil higher, because that's how oil often behave when there's military conflict or in the event of war. Then the other thing is that China is stockpiling crude oil, and it continued to grow year on year. So last year when I did a topic on energy, I already show a chart that China's import of oil has actually increased by double digit, and this year is continuing to increase as well. So that means that China is stockpiling oil and also gas, because they have a huge shipment from UAE, okay, to China. So another thing that could happen to the price of oil is that's the process of de-dollarization. Now, some of you all might have read, okay, that the BRICS plus nations are looking at trading using local currencies and outside of the influence of the US dollar. And probably by end of this year, that trade will be done by using a digitized token that will be backed by gold. Okay? Because if they use local currencies, a lot of the countries would not trust each other. So the only way that the settlement can be done will be via a digital token. And that digital token must have a value that all the nations would treasure, and that probably will be gold. Okay. So if let's say that happens, there's a de-dollarization process, then the US dollar will weaken. And when the US dollar weakens, then the price of crude oil would actually go up. And as I showed just now, if the price of oil go up, then companies that are involved in energy shipping would stand to benefit as well. So there are a lot of events that are going to happen this year, and potential event, hopefully it's not a major war, okay? But certainly, I think the Fed would be pushed to cut interest rate because of the unsustainable debt and unsustainable interest payment on debt. And that itself would push the price of oil higher. Okay, China stockpiling, the de-dollarization, which will actually weaken the US dollar, and there'll be on and off. OPEC and Russia will play the oil card to push the inflation to the US and to Europe. Okay, especially Russia have every intention to do so, because that would actually weaken, okay, the economy of Europe and the US. So there are a lot of geopolitical chess pieces that are at play. And that is why, as events unfold, it's worthwhile to keep track of what is happening to some of these potential events. Now, let's look at the Baltic Clean Tanker Index. Now, it exhibits almost the same pattern as the Baltic Dirty Tanker Index, except for several differences. Okay, because it is a refined product, the price of gasoline can sometimes increase without the price of crude oil increasing, due to the shuttering of refineries for maintenance. All countries are often forewarned of such incidents, so demand for shipping can often spike prior to the shutting down, even though the price of gasoline may not rise. Okay, so all these are forewarned okay, for example, a major refinery, okay, may actually say that we are going to shut down. So what the shipping industry would do is that, hey, let's stock up. So again, you can see that it exhibit almost the same behavior, okay, except for some of these minor incidences. So again, you can see they play out almost as the earlier chart which I showed you. Now, let's look at crude oil versus gasoline. So crude oil exhibits sharper rise due to geopolitical reasons. Okay, for example, this is the peak for gasoline is, for example, here crude oil actually continue to go up, but gasoline does not exhibit that kind of steep incline. So the rise in gasoline price has more to do with summer driving season in the US, which is normally in July and August, which spikes up demand without impacting shipping. Okay. So, however, it does have an impact of price of crude as demand for gasoline means more crude oil is needed to refine it. So the UP World LNG Shipping Index. Now, there's no direct correlation between the two charts because the UP Index is an index of companies in the LNG freight business. Generally, if LNG price increases, the freight charges will increase, hence the company's performance will improve in tandem. This was most prevalent during the Europe energy crisis. Okay, so this is the LNG Japan Korea index. Okay, the price. So even though there is a peak, okay, this was during the energy crisis. Okay, but then you can see that it doesn't really, sorry, this is not during the energy crisis, it's much further than that. So even when there is a peak, but then it didn't really impact a lot of the shipping companies, okay? Moreover, the UP index could trend up if stock prices of these companies register gains. So it provides sentiment gauge of how investors view the sector. So it doesn't really show a great correlation, even though there is an increase here, but then you see that it doesn't create a specific peak. But here it actually increased, but here it didn't show likewise. So probably if let's say if you are investing in a company that is shipping LNG, you may want to correlate that company with other companies to as a benchmark whether this company is performing in tandem with the general direction of the major shippers. Okay. So how do we correlate with the Bursa companies? So let's look at crude oil shipping and MISC. Now, MISC is a pure play energy shipping company. There were instances when the price of crude oil rose but had little impact on the share price. Now, this could be due to the contract period, okay, that even though the price of crude oil actually increased, for example, over here, it is increasing, but the share price is not reflective, okay? So what could happen is that normally for shipping, especially for energy shipping companies, it is not when I require shipping of crude oil that I call up MISC and say, okay, I need to send how many shipments, okay, by this week or so. So normally shipping is done, especially for big companies here, it's done through negotiated contract over a period of time. So if let's say during a particular period when there is an increase in the price of here, for example, increase in the price of crude oil, that company may not see the immediate benefit, okay, unless it push more ships to support it. And sometimes there might not, all the ships have already been taken up. There's no new inventory that comes in, okay, to immediately take shipment that would boost the company's revenue. But you can see that as the price of crude oil goes up higher, there is a small rise here. And that could be because some of the ships have fulfilled their contract. But looking at the price of crude oil, then that shipping rate would actually increase in tandem as well. So a lot of it has to do with how the management negotiate the contract and the length of the contract. So here is another example. Okay, there's a peak here in the price of crude, but then it's generally flat where the share price is concerned. But here you can see that when the price of crude oil goes up, then the share price also go up in tandem. Okay, normally the share price would react to the company's performance. If let's say for example, if the price of crude oil goes up a lot, but the company's performance does not reflect much higher revenue, then some investors may be disappointed. Okay, and that is when they do not want to invest further to drive up the price of the share, or they decided to sell. So there are these kind of occasions that due to the length of the contract period, the company may not be able to achieve that kind of uh, gains that investors are looking forward. But then again, companies wouldn't take risks, okay, to anticipate a much higher price of oil and such. Companies would actually, the foremost thing that companies in the shipping industry wants is how to put the asset to work. So if let's say the assets have been put to work and they can generate steady profit, then that met the kind of um, business decision that the management wants. Rather than, you do not want to contract your ships, but you put them on hold and wait for the opportunity for the price of crude oil to go higher, because you won't know when it will go up, because the price of oil, as I mentioned just now, has a lot to do with the behavior of the global geopolitical scenes. And management wouldn't want to bet, something like that happen and then they maximize their profit. So that's why as long as the asset is put into good use, then the management would have done their job to ensure that there is steady revenue, and not to have an asset that continues to depreciate but not generating any revenue. But over the long term, you can see that generally it has behaved on many occasions to be in tandem with the price of oil. And another thing, of course, is that MISC also has a LNG shipping fleet, okay? And its fleet size is among the top 10 in the world. So that is why sometimes that there may be an increase in the price of crude, but in the price of LNG, there may not see any increase, and that is when one's balance the other off, okay? So as I mentioned, eventually it is that every asset is put to work to generate revenue rather than sitting idle. So let's look at another company using Maybach and comparing it against the Baltic Dry Bulk Index. So if we look at prior years, okay, during the peak here and the peak here, okay, there were strong correlations with the Baltic Dry Bulk Index. However, due to a smaller fleet size, the uptake in the index from its low in early 2023 did not provide the boost in the company's revenue. Okay, that is because of its smaller fleet size. So that is why sometimes if the company has limited fleet size, but then there is a increase, okay, in the demand, but then they are unable to capture that demand because whatever they have in the fleet has already been committed. So, and that is how the cycles sometimes play on shipping companies. There will be times when there will be a big demand and they can ride on that wave. But subsequent fall in demand and you have a much larger fleet. And as I mentioned just now, they have to reduce the size of the fleet, okay, to actually weather through the downturn, okay? And especially if we look at it, the downturn, okay, from 2022 to 2023 is actually quite steep, okay, from here to here, okay? And you can see that that's reflected in the company's share price performance as well, okay? But when the company reduces its fleet and subsequent uptake of whatever that they have in their inventory has already been committed, so it's very difficult to have to latch on the new cycle in demand. So in conclusion, the world is entering into a similar cycle like the 1970s stagflation, but with that many times over that of the same period. Now, if those who remember the 1970s stagflation, and we are actually going into a stagflation because inflation remains very lofty. The US GDP in Q4 was 3.4%, but then it dropped to 1.6% in Q1 of 2024. So that is an indication that global economy is slowing. And Europe, we have the UK and Germany in official recession. And Europe inflation still remains above the ECB's target of more than 2%. The target is actually 2%, but inflation is actually more than 2%. So inflation remains high, especially in the US, inflation has become resurgent, okay? So that means that we are likely seeing the same cycle as the 1970s stagflation, but it could be many times worse because according to the latest information from the International Institute of International Finance, I think, they are saying that global debt has reached a new record high, okay, which means there's more debt right now circulating in the global economy than ever before at about 315 trillion. And if we look at the global economy is somewhere around 100 trillion, that means that global debt as a percentage of the global economy is somewhere around more than 315%. But the worst thing is that global economy is also shrinking. That means that if the GDP starts to shrink, then what happens is that the debt to GDP on a global scale would increase in percentage. So that means the situation will become very challenging. And stagflation is something that central bankers fear the most. Because if they raise interest rate to fight inflation, the economy will go into severe recession or depression. But if they want to help the economy by having the right fiscal policy, cut interest rate, then inflation would actually go up much higher. So we are in a period like the 1970s. And what happened during the 1970s was that commodities actually have a major upcycle, okay? Because when the economy falters, a lot of investors would park their assets with um, real assets, okay? Uh, like those that actually can be traded, okay, rather than the financialization of assets like what we are witnessing right now. So the world is potentially facing a currency crisis due to the implosion of the yen. Now, the yen is one of the 5 major reserve currencies. And if let's say the yen continue to spike up, okay, it can create a major problem for Japan. And if let's say the economy of Japan experience hyperinflation, then it can affect other countries in the region as well. And if the market behaves in a similar pattern like the 1970s, then commodities will be the major beneficiaries. Now, this could benefit bulk carriers and energy carriers besides the producers of these commodities themselves. Okay, if you know, like 1970s, what we had for the huge inflation was due to an oil crisis. Okay, so oil actually went up very, very high. And although containerized freight is benefiting from the present elevated price, it will be capped by ongoing gloomy economic outlook in the coming quarters led by the decline of the West. Now, inevitably, because of the huge debt among the Western economies, there will be a lot of challenges that will come from there, okay? And those companies that operate in the West would see greater pressure, especially as I mentioned, um, with a lot of the BRICS economies um, trading among themselves, okay, away from the influence of the West. What could happen is that there's de-dollarization, okay? A lot of trade will be among the BRICS and not necessarily involving the West. And we can already see, okay, on a PPP basis, which means the purchasing power parity, the BRICS nations have already exceeded that of the G7. And coming up in this year, there are reports that up to 40 countries are actually interested to join BRICS. So if let's say 40 countries join BRICS, increasingly they will constitute the greatest percentage of the global population. And if let's say the greatest percentage of global population trade outside of the US dollar, then it has severe impact on the value of the US dollar. So while we witness the decline of the West due to unsustainable debt, okay, Asia could benefit due to intra-region trade, okay, and freight companies focusing in the region will actually fare better because no matter how we see it, the RCEP has actually benefited ASEAN a lot, and trade has actually flourished. And right now, China is investing heavily in Southeast Asia. And because of that, there'll be a lot more trade intra-region, okay, which means in Asia, within Asia itself, and within the Belt and Road Corridor, okay, involving Central Asia. And because of this flourishing trade, even though the global economy might experience a slowdown, I believe that this time it will not affect uh, Asia as badly as last time. Um, like the 1997-98 financial crisis. If we look at the how the US and Japan behave, of course, will have an influence in Asia as well. Okay, how they want to mitigate, okay, the implosion of the yen. It will have some impact. So that is why shipping companies that are in the energy, I think would be very, very safe. Okay, because no matter how we see it, um, demand for oil will never go away. Okay, and a lot of the countries that are coming out will actually require oil as the cheapest form of energy. And not many of them can afford the electrification of the infrastructure like what China is doing via via the new energy policy, okay, uh, or renewable energy. So that's why the consumption for oil would still be one of the cheapest, and coal is also one of the cheaper uh, source of energy. So if let's say the all this comes into play, then if the commodities will perform as expected like the 1970s, then I think shippers in the bulk and also in the energy sector would actually benefit them. Okay, and local logistic companies may also see some benefit if let's say they are actually riding on the wave of intra-Asian trade. Okay, so even though even though those companies are not directly involved in shipping, but they are active participants in regional trade in the logistics sector, then they too would stand to benefit somewhat. Okay, this is just my opinion, okay, not financial advice. Okay, having said all this, right now we can have the Q&A session.
Thank you so much, PC, for doing this segment for us. I guess now that we are better familiar with the shipping indices and what are the factors that may change the index. If you have any questions to ask our speaker today, you may write them in the Q&A box, and we will do our best to address all questions. Q&A box here, not the chat box. So the first question here is, why is there a big price difference between the jewelry chart and the trading economy chart? I think that is in one of your first few slides.
Um, okay, because the jewelry chart is only 1 year, okay? The trading economics, you can actually expand it to maximum, okay? Which means whatever data they have up to that period of more than 10 years ago, you can actually have that chart. If let's say that is the difference because the jewelry only showed 1 year. Perhaps because if you want a better chart from the jewelry, you have to pay for it. Okay. And right now we want to the purpose is to share things that you can get free. Okay.
All right, thank you so much. The next question is by Eugene Wong. Will Sarawak cabotage policy be a positive catalyst for the shipping counters operating in Sarawak?
I think a lot of it will be dependent on how that policy will eventually be implemented, follow through, and so forth. Now, one of the weaker things is that sometimes we have great ideas and we want to achieve certain intention to boost particular sector, but the follow through of implementation sometimes could be weak. I think let's watch how it unfold, and then perhaps then we will have a better indication. Yeah.
All right, the next question is by Ahmad Amza. Will the Malaysian export be affected by the Middle East tension?
I think Malaysia is net exporter of oil. Um, if let's say the uh, if let's say there are shipping constraints in the Middle East which affect the oil, then if Malaysia doesn't have those oil that are producing within Malaysia and regional, okay, that are owned by Malaysian companies may fare better, okay, because some of the oil flow would be restricted from the Middle East. But that depends on a major military conflict arising in the Middle East that will create more choke points. But other than that, I think those companies that are operating within the region, if let's say something that causes a choke from the oil coming from Middle East, then those companies with the higher oil price, okay, and no restriction to shipping, then they will actually do much better.
Thanks, PC. The next question is, the US dollar is very resilient even now as the US economy is picking up, whilst China is facing a possible recession from its property development sector. So how could this affect China's BRIC?
I would say that this is actually not true. First thing, China's economy grew by 5.3% in 2023, whereas the US grew by, I think, about 3.2%. So China's economy growth has actually outpaced the US. And the Chinese economy in the first quarter was around more than 5%, but US actually saw its growth from fourth quarter to the first quarter drop from 3.4% to 1.6%. So which economy is facing headwinds? Okay, China continues to grow, whereas US growth has actually softened. Now, if you really want to work that into debt to GDP, China's debt to GDP, okay, government debt to GDP, I'm not talking about total debt to GDP. Now, China's government debt to GDP is less than, I think it's around 80%, if I'm not wrong, less than 80%, whereas US is already 130%. Now, if you bring the US growth, every dollar of growth in the US would require, okay, about a few dollars more to grow its economy. So while US economy is growing, its debt has actually been escalating. Why? Because the US not only have a budget deficit, which is nearing 3 trillion this year, it also has a budget deficit, which is another 1/3 trillion. Whereas China, the Chinese government debt is less than 80%, and it has a budget deficit of several hundred, it has a budget surplus of several hundred billion a year. So which economy is doing better? Okay, now the reason why people like to say the Chinese real estate market has imploded and so on. Not many people are aware that the Chinese real estate market collapse is engineered by the government. Okay, so the Chinese real estate market started to fall in 2021, while after a lot of warnings by the Chinese government, people continue to speculate on the real estate. Then the government actually pulled the plug and the real estate actually collapsed. In fact, prices of the real estate have collapsed around 30 to 40% over the last few years, because the Chinese government does not want the Chinese economy to mirror the US, where it's done through financialization of asset, which means speculation. So what happened is that when the real estate, which at one time was 30% of the economy, right now has fallen to about 17 or 18% of the economy. But interestingly, high-end manufacturing in China have now exceeded the real estate market in terms of contribution to GDP. So when people like to talk bad about China, they often relate it to the real estate. No one wants to talk about the Chinese high-tech manufacturing right now that have exceeded its real estate economy. And if you look at the kind of high-tech manufacturing that China is doing, okay, they are photovoltaic industry, their EV, their batteries, their solar power, their wind power. So they are actually out competing the West. And that's why right now the West say is over capacity. Again, it's another lie. Okay. China export globally of its vehicles is less than 20%, whereas uh, whereas Germany and Japan is about 80 and 60%. So which one actually have overcapacity? That they are exporting 80% of their capacity or 60% of their capacity. So that's why sometimes I urge a lot of people to read both sides of the stories rather than just listen to certain mainstream media, okay, which is trying to uh, bring down, okay, certain economies of countries which they do not see uh, eye to eye or support. So China actually has improved tremendously in terms of its high-tech manufacturing. And that is right now the major contributor of its economy, not the real estate. So hope that answers your question.
Thanks, PC. So the next question is by Muhammad Nur Hakimi. Can the US government do financial repression as a means to reduce the deficits?
Actually, some economists said that uh, it would be best for US actually to cut interest rate, allow the inflation to blow up, okay, because that would actually uh, reduce its um, so-called interest payment on that. Why? Because money borrowed today is worth less tomorrow. Okay, so a lot of economists sometimes say that, you know, when you have no choice, the only way is inflate your way out of the debt. But right now, the kind of economy that US face is that there is a huge wealth gap in the US. Okay, if we look back several decades ago, the middle class actually has greater wealth than the top 10% of the population. But right now, okay, the top 10% of the population has greater wealth than the middle class. So what the Federal Reserve has done is that those in the middle class have been suppressed and more of the middle income group has become low income group, whereas the top 10% continue to make more money because of the money printing by the Fed. So um, in fact, the number of homeless people in the US, according to a report last year, they have reached the highest on record. So that is why the middle class and poor is being suppressed. The rich continue to gain wealth because the US economy is essentially a financialized economy. It doesn't have the manufacturing base because a lot of it has been shifted to emerging economies. When economy cannot make products, what happened then is that you have to import for consumption. That is why having a manufacturing facility is very important, not the financialization of the economy. Yeah.
Thanks, PC. The next question is by Clarence. Is freight costs affected by the Baltimore bridge collapse? What about the insurance costs?
I think the Baltimore ship collapse has more to do with the how it impacts the US economy because that is a primary port, but it has less less impact on the global freight shipping costs. Yeah.
All right. The next question is, are you able to comment more on the Maybach business?
I think for Maybach, the challenge is um, trying to, if I recall, okay, about Maybach, uh, some years ago, they started expanding their fleet. But when they expand their fleet, it was when the fleet finally entered into service, there was already a lot of headwinds. So I think it's very challenging for the company right now how to manage their asset, and hopefully, if the price of commodities start to go up, then they will actually benefit from it. And maybe then they will have more ability to maybe add, um, add the fleet to actually ride on the cycle. Because if we look at the 1970s cycle of the stagflation, the commodity cycle actually lasts longer. But if we look back on that peak from the global financial crisis, it was very short. Okay, so if prices of commodities continue to go up, the demand for shipping will go up, then hopefully the company can actually benefit from it. The company, if I recall, they still earn a profit. Okay, it's not as bad. So hopefully, when the cycle change, the company will also benefit from it. Yeah.
All right. Thanks so much, PC, for doing this Q&A session with us. There are still some questions on my panel, but I think time has run out, so we'll just move on. All right. So, ladies and gentlemen, you just heard from Mr. PC Wong, who is a full-time investor and also an author. Thank you so much, PC, for sharing your view on this insights into the shipping industry.
Yeah. Thank you, Shane, and thank you all who tune in to this session. Wish you a very pleasant evening. Good night.